So, for those who have just entered, I'd say welcome again to today's webinar on realising the potential of machine learning in insurance, a co-branded webinar between Intellify and Databricks. I think that should be about enough time, and so let's kick it off. So if we jump, so this is the agenda for today's webinar. I'll start with a bit of a brief introduction to myself and Intellify. Then I want to really broaden the lens out a bit and discuss put machine learning and data in a broader context around the shifting nature of the customer-insurer relationship. I'll move then to discussing some specific use cases and talk around how data and machine learning can enhance the insurance customer journey, with a particular emphasis on improving underwriting outcomes, improving customer experience through automation, and a discussion around streamlined claims processing. Lastly, I'm going to round out the talk with a discussion around productionizing machine learning and how, through use of platforms and scalable patterns, we're able to place machine learning in a BAU environment and an ML ops, DevOps environment that supports BAU activities. And then finally, there'll be about 10 to 15 minutes time for this, questions or more general discussion. So a little introduction to myself. My name's Cam Cairns. I'm the practice director here at Intellify. I have a physics, data science, and machine learning background. Spent the last 6 years working as a data scientist, an ML engineer, and managing teams of data scientists and ML engineers, predominantly within the financial services and insurance industries, both here in Australia and back in the UK. In the UK, I helped build out a new machine learning focused digital brand for a large personal lines UK insurer, which had ML at the core of the risk and pricing components of that of those products, as well as the personalization around the brand and the customer marketing and engagement. At Commonwealth Bank, I worked at Commonwealth Bank prior to joining Intellify, where I was running data science and ML teams to speed up the credit and risk checks on lending products across that organization. I'm really interested in all things data science and ML, but I have a particular interest and focus on how we can leverage those tools in a commercial setting in terms of a productionized product. In terms of Intellify, we're a industry-leading machine learning and data consulting firm. We're an AWS partner, and we have 3 broad offerings or streams of work. So ranging from strategic advisory, and that can be a very technical data strategy and architecture, design and assessment for a commercial enterprise, through to more business-oriented strategy around data and machine learning, as well as machine learning use case identification and validation. By far, the bulk of our work is in the execution space. We've got a very strong data and ML team comprised of a large, I think over 7 to 8 ex-Amazonians, building out data platforms, ML platforms to support organization use cases and data and models. And a really great data science and machine learning team that builds out, goes into an organization and either can supplement and work with existing analytics or data teams, or to build out solutions or build standalone. And lastly, we offer a managed service for either the products that we've built or existing products that an organization is looking to have support for. But now let's dive into the meat of the subject. And so I think in 2020, especially given the COVID experience of the last 8 or 9 months, insurance is at a really interesting position. I think most people would agree, looking at the last 10 or 15 years, the traditional insurance business model has been remarkably resilient, especially if you compare it to some of the other areas that are widely recognized to have been significantly disrupted by technology and data organizations. However, that the new technology and data environment really has some far-reaching implications for that insurance risk landscape. Accenture put together a survey on disruptability across different industries, and part of this was the quadrant plot you see on the left. And what they did here was position different industries and domains on a two-dimensional matrix. On the x-axis, the susceptibility to future disruption of an industry, and on the y-axis, the current level of disruption. And what you see is that they've placed insurance both. They've placed insurance in the bottom right-hand quadrant, so both having a relatively low level of current disruption, second only to the health domain, but also susceptible to large amounts of future disruption. And I'm a really big believer that data and technology hold the key for both empowering insurers to be able to manage future change successfully, but also thrive and grow market share in that changing environment for those organizations that are able to position their organization to leverage those rich data sets and new technologies most effectively. More broadly, I think you'll see a reweighting from a pure or largely payer-payee relationship for insurers to also begin to inhabit much more of a partnership role or a risk preventative role. And you definitely see this already in some subdomains of insurance, particularly in the health side. But what I have seen and imagine will continue to grow is an extension of that and a deepening of that. So if we now look at just broadly those changes in that customer-insurer relationship, there's a few broad trends. So a movement away from being a transactional relationship to one to be more advisory, focusing on, rather than low engagement transactions, more strategic, high engagement customer interactions throughout the lifetime of a member or customer policy. Movement away from being purely reactive to actions initiated by a customer to being more proactive, with better tracking and better predictive capabilities to preempt, customer needs or actions. A movement away from broad segment-based offerings. So be that product, be that pricing, be that discounts or marketing, and to something more personalized. And personalized engagements, tailored offerings or messaging based off an individual's profile. And lastly, movement away from being product-based, where there exists a set of defined product features with standardized pricing and placement, to one that is more solution-based, based off customized and based on an individual's needs and processes. What I've put together here is a few broad pillars or subsets of a customer journey, and one way I like to think about how leveraging ML and data can really improve and provide value across that journey. On the left, we've got a couple of broad categories of experiences or components of a existing customer relationship, and on the right we have pillars or actions for prospective customers. So if we start with predictive underwriting and risk models, it's all around using customer data, historical information about that customer to provide the best understanding of that underwriting and risk. I'll go into a lot more detail on this in a couple more slides. On the pricing side, which is really around increased sales, is using dynamic pricing to optimize the market price for a product or a policy to maximize revenue and for an organization. And that's all based off having the best view of a customer risk and purchase profile. Moving over to tailored experience, it's all around reducing lapse and improving the depth of relationship and quality of relationship with the customer to improve their renewal behavior and reduce churn. This involves a range of things from, as I mentioned, improving the quality of those touch points, but also identifying those customers that might be susceptible to churn and the reasons for that, and being proactive in attempts to head that off at the pass and reduce that churn rate. And lastly, streamlined claims. This is a really big source of potential improvements, both on the operational side and improving the speed of processing, increasing automation, but also improving the accuracy and reducing the fraud on an insurer's books to improve overall profitability and predictability. I'm going to talk around underwriting and risk models, dynamic pricing, and streamlined claims. I'll talk less around the lapse side, but it's a fascinating subject in and of itself, and happy to go into more detail in a separate section if anyone's interested. So if we're talking about underwriting, if I was to simplify it down, I see it as three broad steps. It's a complex process of discovery and then grouping or segmentation. So both discovering and identifying relevant information around a customer or a prospective customer, assimilating or synthesizing that into a coherent picture of risk that can then be used to drive business actions based off that view. Now, one of the things that jumps out here is that there's a lot of independent steps. There's no single solution that you would say, yeah, let's just get that off the shelf. What machine learning offers is a series of specific tools and applications that can augment different parts of these steps and augment human underwriters, making these steps more effective and more efficient. And really the goal here is around not getting rid of underwriters or human underwriters, but removing some of those routine tasks and tasks that an algorithm is just much better at bringing together and synthesizing information, and providing those underwriters more time to spend on value add or complex tasks associated with customers. I'd say one of the biggest opportunities in the underwriting space is really around data, and the core question, or the key question here is, what other data sources exist that would or could provide a better view of a customer that we are able to utilize? There is orders of magnitude more unstructured data out there than structured data. And there are large gains to be had for organizations that are able to process and incorporate that unstructured data in a way that allows their underwriting team to efficiently make business decisions and accurate business decisions off it. So that could be everything from image and video. At this point, image and video recognition is so commodity based that any organization has access to cutting edge, world beating image recognition software through something like Amazon Recognition or another API commodity based tool. Similar thing with natural language processing of raw text and pulling out information pertinent to the underwriting process there. The follow-on steps there then are, how do you take that information and synthesize it into an underwriting process? But that data infrastructure, we're at the point where we can build that and use that. A similar comment around real-time or streaming data. So certainly, across insurance domains or subdomains, you're seeing an uptake and utilization of sensors, whether that's telematics in auto insurance, IoT sensors in other subsets, or even health data for different customers. And so being able to, there's certain challenges with that high volume set of streaming data, but again, a lot of value that we've observed can be derived through processing that data appropriately and bringing that into an underwriting view. And lastly, a topic that I'm really quite interested in and have a fair bit of experience is around building out proxies for missing data in a customer. And so this was an area that I spent a lot of time in at Commonwealth Bank, is to try, there's a tension between having as frictionless and streamlined onboarding and underwriting or risk assessment process as possible, with having the best possible view of a customer's risk. And often you're able to build out more comprehensive views of a customer's risk based on the information you have, without needing or wanting to go back to a customer and require more information or more documentation. Particularly if they're a customer that has been with your organisation or has been a member with you for previously. You should have a wealth of historical data there and can leverage that to create some better understandings. So if we jump now to looking at how data and ML can be used to improve or add value to that underwriting journey, here's a simplified customer journey for underwriting. We'll start with receiving a submission and incorporating that data into the organisation. A lot of this is around data engineering, and so standardizing and streamlining that data submission, having the infrastructure in place to be able to provide rapid data manipulations and synthesizations, pulling and assimilating third-party data or streaming data to create that view of the customer that can then be used in the subsequent steps. There's also opportunities around improved customer experience and interaction, either through chatbots to receive and resolve queries easily and more cheaply on the insurer side, and also digital concierges, so recommending risk categories based on historical customer data. If we now jump to analysing that risk and going through a triage and fraud detection phase, my observations are what the most common pattern here is to seek to define low touch and high touch customer segments or groups. So using machine learning or business rules to predict risk based on the wide data set that's been synthesized in the previous step, and scanning for inconsistencies or potential risk flags that either indicate that that a particular customer requires a higher touch and more information to be sought through a customer representative, or it can it's a low touch standard claim that can be passed through to the next step, which is ultimately the produce the quote step. For low touch paths, we're using machine learning pricing algorithms to generate a quote. There's a lot of different things you can do in this space. I will discuss a little bit of it in the next 2 or 3 slides, but it's really an area where data science, where machine learning excels in being able to produce an optimized price for that customer and that market segment. For those high touch paths, they get passed on to a underwriting representative, and you can utilize machine learning to actually highlight and identify key risk factors that have driven that particular customer down that path. And so with the aim of improving or speeding up the human customer engagement process. And then finally, there's the final step around binding the policy, automating that data into the system, automatically generating docs and reports that are used across the operations. So now I want to talk a little bit around risk pricing and adverse development forecasting. So there's a whole cadre of traditional actuarial methods that are used in different areas. So for risk modeling, predominantly you're talking about generalized linear models, GLMs, for severity frequency modeling. Pricing, I still see a lot of, so market pricing or commercial pricing, I still see a lot of use of linear regression or some variant of it. And then on the claims forecasting and reserving side, chain ladder, BF methods, that sort of thing. What I'd say is, or from my experience, using machine learning, even as a benchmarking exercise, allows an organization or an actuarial team to get a feel for what the delta is between what some of these traditional methods are providing in performance, in accuracy or profit, against some of these newer techniques. I want to just give an example of a previous project that Intellify did with a large health insurer about 6 months ago now. So we took on a project around outstanding claims forecasting for NIB, large health insurer, over 1.6 million members in Australia and New Zealand. What that project looked like was working really closely with the actuarial team, collaborating with that team to build a better outstanding claims forecast for a particular modality, in this case private hospital, which was which is the largest and most consequential modality on most health insurers' books. In a 6-week engagement, we developed an alternative machine learning based approach using Bayesian time series methods that we developed, benchmarked and validated that with the team using Databricks and AWS. That model brought in a wide range of internal data within the organization, as well as external and publicly available data sets in the economics and census space. And what we ended up with was a really substantial reduction in the error of that OSC forecast. And that insurers use outstanding claims forecasts for a whole range of things, ranging from business strategy through to reserving, through to pricing, through to strategy or the strategy to take in product. And so improving the accuracy in this particular area has significant flow-on effects for many aspects of that business. This project was really so successful that NIB continued to build that out for other modalities and other domains, and we've also been engaged to build out more of the machine learning platform and productionization in that org. So how is this different from a traditional approach or a traditional actuarial method? To simplify it, I think there's two key aspects where ML can really provide a lot of value. One is the methods tend to be more robust to data nonlinearity. And certainly there are methods in the actuarial toolkit that are nonlinear. So generalized linear models are based off assuming a form of nonlinearity for your data set. But those nonlinearities tend to not always work, or those assumptions around nonlinearities tend to not always work, and they tend not to map onto what real-world messy data looks like. And so the nice thing about leveraging machine learning algorithms is that they're able to incorporate more of that, and they're more robust to the day-to-day messiness of data that you often see on your book or in your customer base. Secondly, machine learning models tend to just be better at handling wider and deeper data sets. So a lot of the actuarial methods that I mentioned before, were developed many decades ago, well prior to the amount of compute and storage that we have available to us now. Either some of them developed for pen and paper calculations, or certainly in the spreadsheet age. And because of that, those algorithms or those methods tend to have a fixed set of data inputs that they're looking for. And it's not easy to incorporate either different types of data, like the third-party data that I mentioned in the previous example, or if you do, it's through quite time-consuming and challenging ad hoc fixes to try and add in interactions or to try and flag different data changes. And so one of the things you'll find with machine learning algorithms is that that they naturally fit in that scalable space to be able to bring in that wide view of a customer or a process. I just want to have a quick chat now around risk premium pricing as well. So as I mentioned, a very typical approach would be to use a GLM. It's another good candidate for approaching using different machine learning approaches. And there's a lot of literature in the academic space around benchmarking, and they tend to outperform actuarial methods quite nicely, and that is also what I've seen in the commercial space as well, for the same reasons that I described. More robustness allowed for more insights to be derived from those larger, complex data sets. Jumping now to a discussion around no or low touch claims. So why does it matter? Well, in a recent EY Global Consumer Insurance Survey, 87% of policyholders said that they believe that claims experience would impact their decision to remain with their insurer. I mean, it's a no-brainer, isn't it? One of the key engagement points a customer has with their insurer is when they're looking to get paid out for a claim and make good on their policy. And so the key consideration, so it's a real make or break situation on a customer's view of their insurer and whether they will remain with them going forward. Key considerations in that process are speed of settlement and process transparency. And in the same survey, EY estimated a potential 30% reduction in cost of claims just through increased automation on that process. A similar pattern in the underwriting space is what we observe as being very common, a mixture of process and technology change to streamline claims. So this really involves triaging and directing the incoming stream of claims across a few different branches. So on the left, you've got Express, which is aimed to be no or low touch. So these are for standard or no complication claims, maybe small claims, can be handled through a process of algorithmic decisioning to whether to pay or reject the claim, aims to have fast resolution for simple events. We then have the standard claim stream, moderate complexity, handled by an experienced team, where we're looking for speedy resolution. And then lastly, in any organization and any insurance space, you'll always have some complex claims that require specialist resources to handle. And maybe this requires higher contact with the customer or additional information, more touch points, specialized knowledge. But having a team there that's able to support those with the care and resourcing required is one of the things that no and low touch claims really opens up. In a recent estimation, Deloitte estimated that 70% of claims might be appropriate for no or low touch treatment in the general lines or personal line space. The last bit around this is the triage model, which makes the decision around whether a claim can be automated or put through the express lane, or whether it's standard or whether it's complex. Here, you're bringing in aspects of the claim, so the type of claim, the cost, policy coverage details, customer information, what supporting evidence or other data is available, any other supporting information to help that process triage the claims down the relevant path. Looking a bit more around the specific claim journey, we can see how ML can further be incorporated and lead to rapid use and segmentation. So even before we have a claim, there's a whole amount of work or interesting piece around claims prevention and customer care, and really solidifying that customer relationship with an insurer. So utilizing additional data, whether it's health or lifestyle, to engage customers, behavioral analytics or gamification to drive preferential outcomes from a book perspective and as well as a customer outcome perspective. If we talk about first notification of loss, we have a chatbot interface, again, to accelerate and streamline customer claims path. Tends to be a lot cheaper than a call center method, so it's often a win-win. There's a huge piece here around using machine learning for claims event prediction, around what are the likely severity or complexity of that claim, and also around using OCR. So OCR is, again, a heavily commodified image recognition tool. With the advent of improved deep learning and character recognition, these are very strong tools that can be incorporated into a business-specific workflow to pull information out of either a digital or a paper-based document and automate that data upload and transformation. And finally, using machine, one use case that I've seen before and I actually really like is using ML for accurate processing time predictions. Often it's not necessarily the time it takes for a claim to be processed, but the uncertainty around how long it's going to take. And so by giving a better understanding and visibility over likely processing times, NPS and customer experience can be improved significantly. So if we move now to claim triage and segmentation, I already talked a little bit about this in the previous slide around the segmentation and triage side. But so leveraging those claim characteristics and that understanding of the claim in the context of a customer and an insurer and that relationship to understand whether this can be automated in a no or low touch form, or whether it needs more a higher touch take. Whenever you're talking about moving to no or low touch claims, you also need to talk about improving or building out a claims fraud detection, because they go hand in hand. If you're reducing the amount of personal oversight from a human, there is a trade-off there in some of the fraud space. Machine learning is a fantastic resource for fraud detection. There's some wonderful products out there, like Amazon Fraud Detector, or you can roll your own ML model, but identifying the risk factors or the inconsistencies highly associated with fraud and bringing those into a business action environment, I would say needs to occur at the same time as an organization moves to no or low touch claims. And then lastly, around claims assessment and resolution. We can use deep learning models and image recognition and video processing models to pull out more information around evidence, whether that's photos of damage that a customer may have provided, or receipts, or information about a police report for a stolen item, to improve speed and convenience of that claims resolution activity. Similar to the first notification of loss, using OCR to extract invoice and billing data where needed, but also around workplace planning and scheduling optimization for the claims assessor space in your organization. ML is very good at forecasting that type of requirement, and so we've seen that used and we've built out these systems not within insurance specifically, but definitely in other large organizations that require that workplace planning flexibility. Now I've got around 10 to 15 minutes left, so I just wanted to talk specifically around productionizing ML, because it's one of the interesting challenges that I've seen develop over the last, ever since I started, as we move from notebooks and very much proof of concepts through to proper software engineering and DevOps capabilities to support data and ML within a business as usual setting in an organization. So here's a little potted history of ML and modeling through the ages. A long time ago, back in the Stone Age, we compile algorithms in C++ or another low-level language. Back in 2010 to 2015, something that I'd call the notebook age. So really it's for anyone who's used Jupyter Notebooks or RStudio or the SAS environments, let's throw everything into it. They're very much a development and analytic environment. Let's put in everything in those notebooks, maybe develop some proof of concepts, show that things can work. And then when the business says, fantastic, let's do something with this, punt it over the fence to someone else, to the IT team, who invariably just let it sink into obscurity. More recently, in the last decade, it's something that could characterize as the platform age. This is really the peak. Data science is the sexiest job of the 21st century. Able to name their price and title. You see an emergence of different platforms that seek to support some of that productionization. So you've got SageMaker on the AWS side, MLflow for Databricks, a couple of other offerings like Michelangelo, which is the Uber platform for ML. They're there, and definitely the problem's been recognized that we want to move away from proof of concepts and we need to add stuff in production, but there's still a gap and there's still not a lot in production. Now I'd say we're in the ecosystem era. We really have an increased focus on productionization and taking some of the promise and some of the great stuff that's evident from certainly some of the leading tech icons of our era, and bringing those into other areas of commerce and business. And here data engineers are now like the data scientists of the platform age. Organizations are identifying that there's a huge amount of infrastructure or a lot of infrastructure that needs to also go in to support some of the analytics and some of the analytics that they're looking to be able to use in their BAU activities. And then what does the future look like? Well, I think it's already here in some organizations, and it's really a product thinking age, and not just product thinking, but also the technology to support that thinking. So what I'm talking about is vertical shards of consistent technology to support a end-to-end ownership from data ingestion through to whatever your machine learning or advanced analytic capability is, through to delivering the prediction or outcome, and having a team that supports that as a product. So with defined SLAs and SLOs, with proper documentation, proper DevOps capabilities. There's an enormous amount that can be done to support this, and I think data mesh is a concept that we'll all be hearing a lot more over the coming years, but really brings in this idea of how do you allow for decentralization from a product perspective, while also serving this on a shared piece of infrastructure and enabling security, governance, and interoperability as core principles. So I think it's useful to just discuss why ML in production has been so difficult. I'll go through this relatively quickly, but really what we're talking about here is organizational issues. Every place has them, but politics, silos, data leadership gaps. And there's something about machine learning that because it crosses so many horizontal layers, goes from the tech side and the data side and the data warehouse side through to the business strategy side and the operations side. That means that it's challenging to really, for organizations to have really taken hold of that in a coherent way. A couple of larger organizations have approached this with a really big bang approach and just said, we're going to build a big big thing, and when it's done, everyone will use it, and that invariably has not worked. IT has tended not to be there yet. You know, there's a bit of a learning curve around taking on DevOps, taking on cloud. And if we're honest, you know, machine learning is an analytics and statistical based technology that sort of sits in either your, you know, for an insurer in the can sit in the actuarial space or in some other part, and hasn't really emanated so much from the IT. So there's been challenges there. ML, you would have seen in the previous slide that machine learning has tended to come from more of an academic setting initially, and hasn't taken on a lot of those software engineering best practices up until, you know, a couple of years ago, which has tended to hold it back. There's been poor access to data. Every organization has that. Lack of trust in data and models. There is a learning and cultural growth to bringing in new ways of working, especially around ML. And you know, speaking personally, there's been a huge amount of additional development and work put into machine learning explainability and giving oversight and transparency to how a complex model works. You know, at Commonwealth Bank, I was one of the activities that I did was to get several machine learning models through APRA and through the regulatory environment. And so there's definitely, you know, it goes hand in hand with the development of these more advanced techniques with the, you know, bias and ethics and regulatory side. And so that has also taken time to grow alongside the, you know, just the pure tech and model. You see an evolution in the market, and I'd say the market is still working out the best tool set and patterns to use. And lastly, legacy is always has a slowing effect on some organizations, particularly when we're talking about data warehouses. You know, they tended to have been built for a different era and a different use case or set of use cases. And so there's a process there to grow and modify them to help support some of the use cases that I've discussed earlier in this talk. If I was to summarize what a good architecture in ML is, or really any tech architecture or solution architecture, it's some average of all these trade-offs across an organization. And it's a trajectory, not a destination. Now, what I wanted to just, in the last couple of minutes I have left, I wanted to just give you a view of how we at Intellify like to build out the infrastructure that supports the ML use cases, some of which I've identified earlier. It's the way that we like to view this is it's a platform that enables the culture of ML ops. So operational machine learning in a BAU environment. It's built on strong foundations, and it is built on software development best practice. So we're talking about best use of security and governance, incorporating continuous integration and continuous development through the stack, proper use of event and job orchestration. We leverage heavily the AWS side on that. If we now talk about data ingestion and a data lake, having that accessible and available in a way that supports modeling and exploration is key. Bringing in a modeling environment that enables analysts, actuaries, data scientists, whoever else, whatever other titles you use in your organization, not restricts them, but does so in a safe way from a security, from a data security and governance perspective. And then having defined model serving, deployment and monitoring patterns that support not just having one or two models or one or two products or use cases in your organization that can scale to hundreds or thousands. And part of that is having the automation and logging and discoverability that is required when you're talking about that number of products and use cases. And then lastly, working backwards from what else exists in the organization, how model, predictions or other outputs, data sets, insights get incorporated back into the BAU workflow. So whether that's through BI tool, existing BI tools, or through defined API patterns. Now, this is actually a slide that I've taken from one of our other webinar series, which is all around the technical implementation and design of some of these patterns. Similar comment to something I said at the start. If anyone is on this call is interested in discussing more details on the technical side, or how you can bring BAU machine learning and platforms to your organization, very happy to have a more detailed discussion on this. But I just thought I'd throw this up to talk about some of the tools that we find are really useful for each of these parts. I'll just call out a few though. On the modeling environment, Databricks is fantastic, particularly with the ML flow side. So this is around the model registry, the inference, the hyperparameter optimization, and model packaging that you need for a deployment modeling environment. Model serving, and we tend to use a lot of SageMaker, is still the best and most stable serving tools available in the ecosystem. And on the data lake and feature store side, we use a lot of different things depending on the customer or client. I just call out a few as being Delta Lake and Snowflake have both been very nice cloud-focused warehouse tools. Lastly, on the data transport layer, or that connector layer, to bring data from systems of record or other sources across the business. Really big fan of Fivetran, but there are a couple of other tools out there that we've used in previous projects. So look, I'll close that off there. In terms of next steps, if this has been very much a quick trip through my experience and Intellify's experience of building out different machine learning use cases across the insurance space, and how to productionize those. If anything has piqued your interest, or you'd like to have a more detailed discussion, absolutely reach out. We're also offering a complimentary executive briefing report. So if you email michelle.hughes@intellify.com.au, we can set up a discovery workshop with Intellify, Databricks, and yourself, understand how machine learning can be applied in your organization. Off the back of that, you will have an executive briefing and a document and some collateral that basically details what opportunities exist in your organization and where you're currently sitting.